Nick, what's ailing them?
Yeah, I mean, well, look, first of all, the consumer staple sectors actually performed quite well year to date relative to the market. And you see the relative valuations at roughly 20%. That's double what the historical average was. So investors have been hiding out in these names. And I think what happened with the recent news from Target and Walmart is it kind of put a little bit of a scare in those money managers, portfolio managers that flooded all that money into this space, thinking that there was going to be no earnings risk. But as we've been saying on this show and for the past few months, it's going to get pretty tough for these companies as we get deeper into the year, as pricing that they've announced may not make it to the market because of the margin pressure their retail customers are feeling. And I do think, just looking at some of the work that other RBC analysts have done, that we could have some more issues with inflation in the energy and agricultural side.
So, kind of tease that out for us. What does it mean for the potential further downside for the names that you cover?
Yeah, so I think my biggest issue has been a lot of these companies have announced price increases that would be necessary for them to hit their guidance for the full year. And as we're kind of rolling through the next few months, I think it's going to be harder and harder for some of those price increases to get through. Don't get me wrong. This sector definitely has pricing power, but we're now on our fourth or fifth round of pricing in some instances. And so as those price increases get tempered, it might create a P&L gap later in the year. And again, I think I'm early. I think this is going to be more of a second half situation as we come back from the summer. But that's really what I worry about. And as that happens, we still have a pretty high relative valuation versus history. So there's still some downside here if indeed these companies do have downward revisions.
Are there companies that are more insulated from cost increases, cost rising than others, and therefore might be good places for your money?
Yeah, absolutely, Tyler. So, coming into the year, our theme was three things. We want U.S.-centric mobility and mobility in general, because we do think people are going to get out and about as COVID kind of starts to become more of an endemic issue versus a pandemic issue. Mm-hmm. We like companies that recruited a lot of customers during the pandemic and are actually holding on to them. And then certainly companies from a cost structure standpoint that have less exposure to some of these costs that are inflating the most. And so out of that basket, we've come up with names and we've spoken about them on this show, Coca-Cola, Estee Lauder, Coty, Constellation Brands. I mean, those are some of the ideas that we've been sticking with for the year.
And Nick, do you feel comfortable at these levels, whether, as you said, your team is a little concerned about the inflation outlook, then we also have the others who are concerned about the recession outlook. What does the scenario analysis imply? Yeah,
I mean, this sector is always going to be defensive, right? The question for money managers is, are there other defensive sectors that might have less earnings risk? And I think that's kind of maybe the realization that occurred yesterday when we saw those results coming out of Walmart and Target. And here's an interesting point. We know the consumer is strong right now. We see it, right? We hear it, but things are evolving quickly. There's this thing called revenge spend, right? And my friend at Alpha Diver, Hunter Thurman, they basically use neuroscience to help understand what consumer behavior is going to look like. And what they would suggest is that consumers have so much pent-up demand to get out and live, because buying things and having experience makes you feel better, that we're going to see this kind of irrational level of spending on services and experiences for the next several months. And then when people start realizing how much they paid for them on their credit card and start coming to reality, there's going to be a day of reckoning. And I think that's going to happen as we get past the summer.